Hello and welcome to the weekly wrap-up. Today I'm joined down the line by Peter Buchanan from CIBC World Markets to discuss his take on what's been moving and shaking the markets on the trading week ending December 21st. So Peter, to start off with, which political or economical event would you say had the biggest influence on the financial markets this week?
Well, I think number one has certainly been the fiscal cliff negotiations in the U.S., and that's probably number 2 and 3 as well. The other things that people have been focusing on, certainly the key one is the change of government in Japan last weekend and the implications of that for monetary policy. And, of course, we had the BOJ meeting overnight.
Whilst the Bank of Japan unsurprisingly maintained key interest rates, their subsequent statement was of interest as it eased monetary policy, increasing its asset purchases by 10 trillion yen. What was your take on this announcement and how did the markets react?
Well, there wasn't really much surprise about the increase in their asset purchase fund to 76 trillion from 66 trillion. We certainly know the economy there has not been doing very well. It shrank at a 3.5% rate in the third quarter. They are technically in recession. We had a worse than expected trade number not so long ago. So that's not really a surprise. The newly elected Abe government, of course, has been pressing them to raise the inflation target from the 1% level that they adopted back in February to 2%. They sort of went halfway to meeting the government's the pressures on that front. They said really that Shirakawa said he's instructed his staff to look closely at that. So people are thinking they may do that when they meet next again in January.
While Abe has a great amount of support among the Japanese people, there is growing concern that his influence might detract from the independence of the Bank of Japan. What are your thoughts on this?
Well, I think the government is certainly under pressure on the economic side. As I noted, they are technically in recession, a decline of 3.5% in the third quarter, a slight decline in the second. And going forward, we had not only very soft trade numbers, a big decline in exports, weak machine tool numbers, that sort of thing. So the government obviously did campaign on getting the economy moving again, both through fiscal stimulus and also by leaning on the Bank of Japan to do more to support the recovery. I don't think it's surprising, though, that the bank has, for now at least, just sort of gone halfway. They haven't said definitely that they will increase the inflation target, but I think this is probably as far as really one could expect they would go at this point. The one thing to bear in mind, of course, is that the new government gets to appoint 2 members to the BOJ's board early in the new year to replace people who are retiring. So this will give them some potential for influencing, for shaping the bank's decision-making going forward.
If we look at the US for a moment, John Boehmer's Plan B fell to the wayside last night due to lack of support, as political posturing seems to be getting in the way of the Democrats and Republicans reaching an agreement over the federal budget. We now only have a few weeks left of 2012. Are you expecting a consensus before the new year? If not, how will this impact sentiment going into 2013?
Well, I think with the press conferences yesterday, certainly an indication that things are not going as well as investors had thought 5 or 6 days ago. And of course, the House of Representatives are voting on so-called Plan B. That's extending the Bush tax cuts for everybody earning less than $1 million. Nevertheless, we would expect both sides really to pick up negotiations. I think it's doubtful at this point they'll have an agreement by year end, but they could well have one early in January. Certainly weakens Boehmer's position. The question really then, I think, is who is going to negotiate for the Republicans. It's possible if that happens, we could see an agreement delayed, perhaps to mid-January.
And finally, given what we have just discussed, could you please outline your projections for the US dollar against the yen in the short, mid and longer term?
Well, as far as dollar-yen, we do think monetary easing in Japan is already pretty much built in. We had a 5 or 6% sell-off in the yen between the middle of November and the middle of this month. So we're actually, even if they do go ahead on these front, we're looking for the yen to strengthen somewhat. We see it trading at 81 to the dollar 3 months out and about 82 by the end of next year.
Peter, thank you for your analysis today. Well, that's it for the weekly wrap-up. The TV team have more exclusive interviews to bring before the weekend, so please do stay tuned. Bye for now.